Johnson & Johnson has announced that it'll be splitting its business into two companies in the next 2 years, which has caused its stock to jump more than 2% in the pre-market trades and triggered a flurry of speculation. Hey, and thanks for tuning in. Holly Shields here for Kalkinemedia. According to JNJ, one of their companies will deal with the pharmaceuticals and medical instruments space, while the other will be focusing on consumer products. Although they're still currently considering options for the split. Johnson & Johnson's CFO, Joseph Woke, said the company is looking for a split option, either through a spin or an IPO split. However, talks are still in the early stages and they'll consider the market conditions before coming to a decision. JNJ has not provided any financial details for the split, but they've said that the transaction will be tax-free, though they do expect dividend payments to continue at the current level. Welk believes that traders might receive new shares of the consumer firm or might even trade stocks of the new health company. With that said, let's see how this announcement reflected on the stock's performance. Well, Johnson & Johnson's stock traded at 167.70 US, up 2.85% on November 12 from their previous closing price. The stock value increased as well by 4.19% year to date. And J&J's market cap is at $429.27 billion, with a price-to-earnings ratio and forward price-to-earnings of 1 year of 24.37 and 16.67 respectively. Its earnings per share is at 6.69 US, and its share volume on November 11 was 4.1 million. The 52-week high for the stock was 179.92 US, and the lowest stock price was at 142.86. In the third quarter of fiscal 21, the company's total sales jumped 10.7% year over year, while its net earnings representing an increase of 3.2% from the same quarter of the previous year. Although Johnson & Johnson's consumer segment represented a small fraction of its total revenue, it achieved immense brand recognition. Its split decision comes just days after General Electric as well announced a similar move to break itself into 3 public companies. This suggested that they are open to breaking themselves into small entities to cope with a rapidly changing business environment and also the consumer choices. Now that you're up to speed, check out some of our other videos to boost your financial IQ, stay up to date, and watch this space for more on up-and-coming demergers. Holly Shields here for Kalkinemedia.